Hello and welcome to our latest urgent market update video. Now today is Wednesday the 11th of January 2023 and this broadcast is brought to you by the Live Trade Room. Now the topic of this particular video is really just trying to get to grips with which narrative is going to win out as these markets await what is tomorrow's US inflation number, and that will be the 12th of January. At 1:30 p.m. UK time. So we've got an important news event ahead. So we want to break this down in a little bit more detail for you because information is power, and of course, if you can understand how these markets are likely to react and respond, it'll give you a great opportunity to try and be a part of the move when it occurs. So let's get straight into it, and we'll start, of course, with a risk warning. Just take a brief moment to familiarize yourself with our risk warning currently up on screen. So let's have a look at this in more detail then. So we'll start with the actual news event itself, just to explain what time and when these numbers will drop. So today we're broadcasting this. We're doing this video on Wednesday the 11th. So we're talking about tomorrow, Thursday the 12th of January, and it's at 1:30 p.m. and this is UK time, by the way. So we're talking about 8:30 Eastern time in the US. And we're going to get very important US inflation numbers out. And if we look at the chart here, in the summer we were up at 9.1%, which was a bit of a surprise to the upside. That was in July. And since July's very, very elevated CPI numbers, we've seemed to be on this little downward trajectory. Now that has certain impacts, of course, for these markets for different reasons. And I'll break those down in a lot more detail very, very shortly. But for the purpose of this video, we're actually the CPI in the US is it looks like it's going from 7.1% to an estimated figure of 6.5%. Now, a few reasons for this sort of positive CPI number in terms of the Fed trying to raise rates in order to bring down inflation. However, we would certainly regard most of this move as very much in line with the kind of the softening in some of the energy markets. Crude oil, for example, we sort of peaked at $120, $125, and we're now down at 75. So a sizable improvement in terms of the cost of crude oil as a good example. So this for us is pretty much low-bearing fruit. The problem we've got with the Fed is that they're on this rate hiking path to try and get ahead of inflation, start bringing it down very much in line with their expectations, which is their targets are at 2%. So you can see even at 6.5, we're already more than 3 times above where the Fed want to be. So we've got these two narratives which are existing in these markets at the moment, and again I'll break those down in absolute clarity in just a moment. So this is the headline rate. We'll also have core CPI numbers, which are monthly figures, and the CPI monthly figures as well. Coming in less than expected, less than previous. So we can prepare for potentially a positive market reaction if these markets come in line with this lowering inflation figure. So the other market to keep an eye out, just before we go into the charts, and I'll explain it in a little bit more detail, would be US bond markets, and you can see that they're softening. So there is, I suppose, the pressures coming out of the bond markets. So we peaked. This is your 10-year Treasury note. So we peaked up at 4.2, just over 4.2, and now we're down at 3.57. So we've already come off the highs quite significantly, and more recently as well, we've had this little downward trajectory off the 3.88 level. So we do have the pressure is easing across the equity markets. Plus, we're expecting a lower figure than last month. potentially a sizably lower figure, and these are all potentially quite positive for financial markets. So if we go ahead and look at the net impact as we go into this CPI number tomorrow, what I'll do is I'll just show you like an overview of the S&P. Certainly since the lows in 2020, we were on nothing but a bit of a bull market, and exponential increase from 2020 lows up to December 2021, where we kind of peaked at 4,800. But unfortunately, the impact of this has been really broadly quite negative, and we're still in that little downward trajectory. Although we've got very important questions that need to be answered around these sorts of prices where we're currently at. You can see we're in the lower levels of this downward trend, but there's certainly, I suppose, a little bit more optimism with these lowering CPI numbers are potentially lowering. We'll see what the actual number is tomorrow, along with a central bank which has already increased rates really quite significantly and are aiming to sort of push them up to around the 5% mark, maybe 5.2, 5.1, somewhere in that region. So we're at the latter stages of the rate hike cycle. Then the question becomes, will the Fed actually pivot? Will we see a recession where the Fed will have to actually start reducing rates? There's a lot of traders and investors out there that are building that particular narrative into these markets. And of course, if the Fed decide to become accommodative, at the moment they're looking to restrict monetary policy and tighten market conditions through raising rates. But if they started to reverse that and started to become more accommodative, loosen trading conditions, this would be very positive for these equity markets. So we can do a little bit of kind of analysis. Our bias certainly is still very much to the downside, very much in line with this upper trend line. So when we get up to these levels, we'll probably have a decision to make, depending on market flows and a whole variety of different factors impacting these markets. If we start hitting a recession, obviously would be good for the US economy, and also if the Fed do what they say they're going to do and raise rates further for longer, then we can probably expect some downward momentum, maybe even making new lows below the 3,500 level, just sitting in here. So like I said at the beginning, this market is going to be trying to navigate two different narratives. And the question we have as market traders is, where are we likely to get the best opportunities in these markets? So let's have a look at potential opportunities and how we can navigate some of these markets. So the first narrative, like I've already alluded to, and if we specifically focus on tomorrow's CPI numbers, the first narrative is around US inflation in line or lower than expected. So the actual expectation is for 6.5. That's certainly the headline rate. Like I just explained to you, 6.5 is what we're looking for. So the first narrative is, if it comes in at 6.5, it's a sizable improvement. We've come down from 9.1. We're currently at 7.1. And if we're now down at 6.5, that's kind of a positive. We're moving in the right direction. If it comes in below 6.5, that would be an improving inflation number, as far as those traders that that see the deflationary elements to these markets beginning to feed through. So the first narrative being, if US inflation is in line 6.5% or lower than expectations, so 6.2, 6.3, 6.4, then that would feed this Fed pivot narrative. So a lot of traders over the last 15 years have been looking to buy dips at every possible opportunity. Now that dynamic has slightly shifted over the course of 2021, but there's still, it's that type of strategy is still at the forefront of many traders' minds. So will we see a Fed pivot because inflation's coming down nicely? There's perhaps less need to continue to increase rates aggressively. So all of those Fed pivot narratives you'll see across the news channels, you'll need to take note of that. But what does it mean in terms of opportunities for us as traders? Well, under these types of conditions, we'd be looking for the US indices to indeed push higher. So we'd be looking for certainly a sizable move, maybe up into the 4100s, something in and around that type of area as a first port of call. Then if conditions are still supportive, we'd probably see way above 4100. So we can look for opportunities in the US indices to the upside. We'd also expect probably more short term the US dollar to actually weaken and to see the US dollar move or roll over to the downside. So we've seen the beginnings of a bit of a softer dollar, and we'd expect that to continue. We could also look at very carefully at the gold market for further highs. We've already had a decent move over the last few weeks. It's continuing to grind higher, and we'd expect that to continue with this kind of Fed pivot narrative. So the alternative, so what happens if US inflation doesn't come in line with expectation? And there's actually US inflation figures come in above expectation. So what would that mean? That would mean 6.7, 6.9, 7.1. Those would be a real sort of negative CPI numbers for the US markets. And this would really lend itself to this Fed higher for longer narrative, as opposed to the pivot, where the Fed would start looking to bring down rates again. We'd certainly have the opposite if it comes in above that 6.5% level for US CPI. So we can prepare ourselves accordingly by looking for the US indices to actually take that little roll to the downside. Now, we could certainly see prices breaking below 3750 and potentially down to 3500 in the not too distant future if this inflation number disappoints to the upside and comes in above the expectation of 6.5. So we'd be looking for indices to push lower. We then look for that dollar to be that flight to safety trade once more, like it was for the majority of last year. So we'd be looking for the dollar to strengthen across many of the major currency markets. And we'd also look for gold to probably peak out at current levels and start to roll back over to the downside. So you can see the dilemma for these markets are really quite important. And we want to wait as traders to see which narrative is likely to lead the way. Because at the moment, we're being bounced from a positive narrative regarding the Fed looking to pivot to the Fed themselves actually saying we're going to stay higher for longer. Don't forget that, but the market forgets that pretty quickly. So we're in this period of indecision at the moment, and we might see a little bit of clarity as we go into these CPI numbers tomorrow. So actually a really important decision for these markets to take. And we're going to be ready to sort of execute whatever trade plan we need to trade based on these two narratives, which you can currently see up on screen. So hopefully some real fantastic opportunities in the pipeline for us as traders. So I do hope that makes sense. Of course, anything covered in this short video, do feel free to email us at support@thelivetrading.com. If you've got further questions about anything we've discussed, you're very welcome to email us there. Great stuff. So all that's left for me to do is to thank you very much for joining us. Do stay tuned for our next video. We'll get that out as soon as we possibly can. Bit of a slow start to the year so far, so we thought we'd have a few of these videos going out, but it's been pretty sort of bland market conditions so far. Hopefully the year will start to kick on now when we hear these CPI numbers tomorrow. Just to let you know, we do broadcast every morning. We do a trade plan session live at 7:30 a.m. UK time every single morning, Monday to Friday, and that allows us to plan and prepare ourselves for the day ahead. So, we want to I suppose pass on really good trading traits for you to adopt. So if you can plan your trades, know what you're looking, do your analysis, know what you're looking to trade, and then execute that trade plan over the course of the trading day. That's a very structured approach, and that's what we educate and teach our traders to do every single day. So we do trade live from 7:30. We do our trade plan session, and then we trade the actual markets live every day in our trading room from 8 a.m. for the European trading session, and again at 12:45. These are all UK times, so do find out what time zone, what time that would be for you individually, depending on what part of the world you're from. And that's how we trade these financial markets, and we do so by educating traders and how to navigate these markets as safely and as considered as we possibly can. So for more information, just go to our website homepage, thelivetraderoom.com, for more information, and we're of course happy to you're happy to connect with us if you wish through our website. There is a chat function there, so if you've got any questions, don't hesitate to contact us and give us a shout. So on that note, thanks so much for joining us. From everyone here at the Live Trade Room, take care, and we'll speak to you soon. Bye for now.